Wait to see what, in fact, the stock market does here. You can see at the open, it is down already 0.28%. We will continue to watch this. There had been talk that investors had been feeling more confident, as in fact the Dow seemed to recover after that more than 1,000-point slide. Things had been looking up, but now increased jitters over China are fueling yet again a volatile start here to the morning.
And the big question is, will we be in for another wild ride all throughout the day? On the phone is David Nelson. He's the chief strategist at Belpointe. David, what's going on here?
Well, a lot of the stocks haven't even opened yet, so the numbers, we're not really sure where we're going to open. I'm looking at futures down about 2.5%. That's where I expect the open to be. Most of the world last night traded off between 3 and 4%. Japan was down almost 4%, and Europe is currently down about 3%. You touched on it earlier in your broadcast. This is all about China. I mean, this is where it started, and it's likely where it'll end. In my from my work I've done, I see kind of a disconnect between our economy and what's even happening in the financial arena, financial assets.
But, given that, David, we've had other analysts tell us not to worry so much for people particularly who are individual investors. I'm not talking about institutional investors, because the advice has been that people here in this country are pretty well insulated from what's happening in China. So explain to us how the uncertainty that is lingering there continues to affect what is happening here.
Well, I think that's only partially true. Look, when you see markets decline like this and you see a horrific open like we saw a little more than a week ago, it's concerning, and it's pretty tough for any investor, professional or otherwise, to not be concerned. There is a connection between us and China, and we should discuss it. Look, a lot of U.S. multinational companies, which make up a large part of our market, have banked on China as the next engine of growth. They've sunk a lot of money into that part of the world, and that economy is really starting to stutter. And perhaps the bigger implication is even political. Some are even questioning, within the party inside China. Some are even questioning President Xi's, leadership over the economy. So, look, like it or not, we live in a global society, so all of this kind of affects us. I think we're probably, certainly the best house on the block right now.
David, as we watch the big board, the Dow Jones Industrial is in negative territory, down more than 270 points. At what point do you become concerned as we follow this throughout the day? How low does it have to go?
I wish I could give you an answer. We really don't know. Bottoms are a process. It's not usually a single event. We probe, but at some point in time, the value players step in. If you look at the yield of U.S. stocks in comparison to U.S. Treasuries, stocks certainly look like the more attractive asset class. Certainly, I would look to some of the domestic companies here in the United States with a lot more exposure, here without a lot of exposure internationally. Supermarket chains like a Kroger. What's happening in China isn't going to really affect their earnings stream. So there are some pockets of strength. Housing is certainly a pocket of strength in this country. It's one of the bright spots of our economy. And that was one of the things that led us into the financial crisis. So I don't really see the parallel. I think this is a lot more like 1998, where we had the Asian contagion. It started in the emerging markets, and I think that's exactly where it's going to end.
David, let me ask you about something called Rule 48, because there are concerns that in this day and age, if things go too fast, too quickly, if they drop too far, that could be potentially catastrophic for some investors. Explain to us what Rule 48 is.
I wish I don't have all the details on Rule 48. I wish I could help you out in that. I kind of stopped looking at all the rules on the New York Stock Exchange, because in the end, it's not going to help me as an investor. A lot of these rules were put in place so that we couldn't have a catastrophic one-day decline like we had in 1987. So there are triggers all along the way where stocks will be halted, but some of these rules actually fed the disastrous opening we had a little more than a week ago, because some companies hadn't opened on the stock exchange when there were valid bids and asks for those companies, and yet ETFs, which are very popular among retail investors, they were priced incorrectly, and some were trading well below their net asset value. So some of these rules help us, some of them don't. Rule 48 is not one that I really focus on.
David, Elaine touched on it a little bit earlier, and when we have been talking to so many different experts over the last 11 days or so, and everybody says the same thing: don't panic, don't sell off. About 11 days ago, we did see a big sell-off, and we heard from different experts saying, look, when it comes to the average investor, maybe the best thing is not to look at it so closely. What's your advice for them as we start this day in negative territory?
The best advice I can give is having the right asset allocation. Look, if you're getting up in the middle of the night at 3 o'clock in the morning to see how Shanghai is doing, you probably got too much in stocks and you don't have the right asset allocation. If you're approaching retirement and you've got 90% of your money in stocks, your portfolio is upside down. You should have a portfolio that's a lot more well balanced. That's really the best advice I can give. And then when you have that strategy, it's got to be a portfolio that can ride through the ups and downs like this. Do not put all your eggs in one basket. It sounds corny, but it's the truth.
David, let me ask you, because you said early on that you were expecting to see the market open down about 2%. Explain that.
Well, some of the indications that we have are U.S. futures, which trade pre the market. They really trade all night long, and we get a very good indication of where stocks are likely to trade. We're also looking on our screens. We're looking at where stocks are trading in the pre-market. Stocks trade, for hours before the market even opens. They're trading in Europe. So if Facebook is trading down 2% in Europe, it's likely to open down 2% here in the United States, and that's exactly where it is right now.
David, oil prices are continuing a downward spiral. Talk to us a little bit about how that plays into the big picture.
Well, I was actually surprised by the dramatic rise we saw in just the last few days of the month last week. Oil prices rose almost 27% after having fallen about 25% earlier in the month. They actually closed with a slightly positive gain. The truth is we live in a world right now where the Middle East needs to pump every drop of oil that they possibly can. The United States production has changed that dynamic. After the fact that after the Iran deal, we're going to have Iran come back online at some point in time. That's another 2 million barrels a day. So you put it all together, the supply-demand, there's a huge imbalance. So oil is likely to stay lower for a lot longer. We're going to see dramatic swings in oil prices, but I think it's going to be quite a while before we see $100 oil anytime soon.
David, what about context here? Because today is the first day of September. When the drop happened, it was obviously August. When the drop of more than 1,000 points happened, about 6% drop in the Dow Jones Industrials, that was August. There was talk about some people being on vacation and how that might have affected the markets. Going into September, has September traditionally been a good time for stock performance or a not so good time?
I'm sorry, September and October, there's been good and bad in both. Probably it leans to the downside. I wouldn't put a lot of stock in the history there, a particular month. I've seen just as many Septembers to be, just really fantastic, months for the market. The same for October. So I tend to stick to the fundamentals and not focus so much on what a month might have done 15 years ago.
All right, Chief Strategist for Belpointe, David Nelson, giving us some context there as we look at the market as it opens in negative territory. Thanks so much.
Thanks for having me.
All right, we're back in 90 seconds. This is CBSN, always on.